Okay, fam, welcome back. So today we're going to be going over Tesla and TSLL as well as the Nasdaq and some other things. So with that being said, let's get it. Okay, so the Nasdaq on the 4 hourly time frame is actually it appears that it may still close back above the EMAs on the 4 hourly time frame. Keep in mind we're obviously taking the stairs up, and in the previous instance, assuming this is the low, it would be the elevator on the way down, right? Um, So that's something to keep in mind. The NASDAQ is kind of flirting with potentially being positive on the day. We had this kind of crazy sell off during the Europe session and the US session opened, and then we ended up ultimately going higher. So, um, based on the technicals that we're seeing right now, we've already finished up the triple QT position for now. So, we're going to move on to the next one. And we were debating what the position we were going to do if the price went up was going to be. And so we've decided that's actually going to be XDTE. So that's going to be the next one we buy. If for whatever reason it continued closing below these EMAs, we were going to go back to GPIC. That's still on the table, depending on the price action, but that's kind of the game plan right now. So it does appear that maybe the NASDAQ is indeed bottoming out here. So we'll talk about Tesla here in a minute. I still want to show you guys this. So the stocks above the 50 and the 200-day moving average has been absolutely slammed into the dirt, so it is still very cheap to buy any of these stocks right now. So if you guys are sitting on cash and looking for discounts based on the technicals and the structure and whatnot, now may be the time to at least consider to start to nibble a little bit. Again, I can't tell you guys what to do, but if we go back to all-time highs from here, you're gonna wish you had bought some. So Tesla. All right, so we're nearly oversold on the weekly. The thing I want to point out here is this. All right, so we have what appears to be maybe, and I've showed you guys this on other charts before, maybe a tweezer bottom pattern forming here. Now, why does this matter? Because this is an extremely bullish setup, and it would be obviously extremely bearish if it was the opposite. You can see this isn't a perfect example, but it's pretty close. You see these right here, a red to green formation with large wicks to the upside. Yeah, that's pretty bearish. That's what's known as a tweezer top. That's the opposite of a bullish move. So we're currently seeing the tweezer bottom right here, right along this trend line that you guys see right here, and right also along this major flip zone from resistance right here into support. So this could be the bottom for Tesla. I'm not saying that with absolute certainty. Can it go lower? Obviously, that's always a possibility. But I mean, at this point, it looks pretty ridiculous. I mean, we've already had 6 weeks of reds, so that's rare even for something as volatile as Tesla to happen. So it would not shock me if this really actually truly is the bottom. And again, we have a nice little double bottom formation here. We did cut back above on the daily. Looks like we may even close above on the daily above this trend line. Nice little bullish divergence, right? We're getting the golden crosses on the indicators down below here. The 4 hourly time frame is even more obvious, all right? The bullish divergence is even more obvious on this time frame, but so is also the double bottom. And I mean, again, once we get a break right above this level right here, this is a trend change or a structure change. So basically, once we get a candle close above right around that 250 area, that's pretty much game over. We should then theoretically on Tesla, we should see a series of higher highs and higher lows and just keep on going up, right? That's kind of how this works. When you're looking for a trend change, you're either looking for a bullish move to the downside or a bearish move to the upside. In this case, it's the latter. So I also want to show you guys TSLL. Again, I know this is a leveraged play on Tesla, but the chart should look almost exactly the same. So very similar setup here. And again, the downtrend line has been broken on the 4 hourly time frame. We have several candle closes above. We just need to get above this 930, and it's off to the races from there. The next level is all the way up at 14, maybe even as high as right around that $15 area. So in terms of the positions that we have, so we have actually finalized, I should say for now, not completely, but for now, again, we're going to go from 30 to 50 to 100 a month per position. That's the goal, to slowly build these positions over time. But again, we bought some more this morning, so you guys will have to excuse me. I have not a cold, but kind of a stuffy nose. So anyways, 3 hours ago, you can see 12 shares at 1686. Again, the markets were a little bit more down earlier in the day. So when we saw that, we wanted to kind of buy the dip because it just makes sense, right? So the average dividend per share on this one, I think, is roughly about 30 to 33 cents. So it's currently 32 cents. So you can see we're over 30 a month. We nailed that in. And then we also bought a little bit more TSLL spot off the market. We were considering doing another cash secured put, but we probably not going to do it quite yet. Want to give it a little bit more time to play out. And we also got some other stuff we got to deal with. So, but the cost base is pretty low. I mean, if Tesla starts rocking into the moon, this could easily turn from a negative to a positive pretty quick. 1284 on the cost basis, 1,025 shares, and the price just keeps on climbing. So you can see we bought another 5 shares at 845, so relatively cheap, lower than the current price. Again, the markets were lower earlier in the day, so it made sense to buy then. And that's pretty much what's going on right now with that. So what we'll do is we'll wait till the market closes so we can take a look at the markets once it's actually closed, and then go ahead and throw on the trade for XDTE for Monday. And that'll just be that. Okay, so next thing here that I actually wanted to cover is the swing trades real quick. So we'll cover these. Again, we are still in these. We're not changing anything. So FATE is, it does appear that maybe this is going to bottom out, because again, when you get like a down move and then it slows down and it kind of goes sideways, that potentially could be accumulation right there before another pop up. Again, this golden cross signal back here was indeed kind of, I mean, it was a good move, but it was kind of a fake out, and then we went lower. That does happen sometimes. Again, if you're in these swing trades and you're not comfortable with just riding the waves, maybe a good idea to consider using a stop loss in this case. So you can see on the daily, it does appear the indicators are moving up and the price is kind of flatlined, which is means we might be about ready to see an upside move. But basically, if you didn't feel comfortable not having to stop here, you'd probably want to put your stop somewhere below the previous low, right? If you got in like right about here at 129, your stop would be down here below the previous low. You'd see the upside here would be about 39%. So if you were only aiming for 15% like us, you would have been good anyways. You wouldn't have had to get stopped out, but the stop would have been roughly about 11%. So you have about a 4-to-1 risk reward on that. And then, of course, if you got stopped out for whatever reason, you could just wait for another golden cross to get back in, and then that's kind of how you would play that. So APLD got a false breakout here and then a downtrend, and now it appears that we might be getting another breakout to the upside. ALT, same thing, potentially a bottoming and another breakout coming. And again, if for whatever reason you got the golden cross and you're like, okay, well, it didn't play out, so in this case, your golden cross would have been like right around here. You would have put your stop down here right below the previous low. It never went below there because it just rocketed straight up and you would have been good. The idea of a swing trade is not to hold for long term, although these could be some long-term plays. I'm not discounting that, but the idea behind a swing trade is, generally speaking, it takes like a few days to a few weeks, maybe even a month or two. It's not really a long-term position, so that's the reason for the stop and the indicators and stuff. So RGTI, we did get a breakout, but then we got it turned out to be a false breakout, and it moved back down. So as of right now, we're just simply holding the positions. We're not going to move anything, and we do expect the markets to continue going up here soon because, again, we're entering out of bearish seasonality. I told you guys this before, February to March, and then sometime around September. It could be anywhere from just September to August to October is usually the most bearish times of the year. Once we get out of that, it should pretty much be upside if the bull market is still intact. So that pretty much covers that. And then in terms of the markets, I mean, we can take a quick look at that real quick. Nasdaq is looking okay. I mean, the structure is building here. If you guys are in index-based positions like dividend ETFs based on the S&P or the Nasdaq, or leaps options or something like that, again, I'm not going to speak to the whole leaps thing, but if you are looking to position in for passive income, these levels may be pretty good. I mean, we're still down pretty far from where the previous all-time highs were, and I mean, it's pretty deeply discounted at this point. You can see just how much we got slammed to the downside. We're starting to get some green for this week, so that may also be a potential sign of a reversal. But peak to trough here on the S&P was minus 11%. You see that nice little wick there? That's some buying pressure of some kind. And then the Nasdaq, obviously even worse. Do understand that if you're looking for volatility, the Nasdaq is your best friend. If you're looking for safety, the S&P would be your best friend. Okay, so 15% on the Nasdaq. That's a pretty juicy drop. I mean, last time we saw this was during August. And then when we did get the continuation to the upside, obviously it was a massive move, right? 27% compared to the 18% drawdown. So you got to decide for yourself whether it's worth the risk to actually invest right now or not. In my opinion, I do think the markets are going to climb higher. It's just a question of how long it's going to take. And I would not be saying, like, if I thought the markets were actually going to dump, like have a serious capitulation, I would let you guys know. But I just don't see that happening right now. So Bitcoin kind of doing what Bitcoin does. I mean, it's trying to create higher highs and higher lows here on the 4-hourly time frame. It looks okay. I mean, it looks like maybe it's creating some kind of bottoming pattern here. Again, we haven't got a break of either one of these downtrend lines. We do have a nice little double bottom though, so there's that. And it's even more pronounced here on the daily. You can see from this pennant pattern breakout, we had a huge breakout here with very large volume on the volume indicator, which indicates this would be a very significant support level, and it has held true so far. But again, we still have not had a break of these downtrend lines. But the indicator is moving up and the price moving down. That's a bullish divergence, which is a good sign, right? That means potentially early indication of some upside coming, which means that crypto should theoretically go up from here. And again, we are still holding on the weekly time frame. This is, as of right now, major support. You guys might be looking at the chart and saying, oh, well, it doesn't look like very major support to me. Well, when in doubt, zoom out. And if you want to see the finite details, then obviously zoom in, right? If you can see it held here, 78,000, 77,000, right? Well, look at these volume bars here. You see how huge these things are? Massive, massive volume bars. So you got a little bit right here, and then you got some right here, right after the breakout, right? Right as we cracked this 77,000 level to the upside, that's when the volume started pouring in, and buyers were massively buying this thing. But you can see we smacked our head against it for many, many, many days, and then boom, breakout, and then just a huge upside move. So you can see why it is such a significant level on the lower time frames. So anyways, that wraps it up. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see you all later. And one last note, we will be talking about Grayscale this weekend, so look forward to that.